I think one of the most important things is just being realistic and being open. When I am speaking to people, I look at the same things that I looked at when I was at Pinnacle: hungry, humble, smart, and passionate.
Hey, this is Jesse here. You're about to hear episode 135 of the Betting Startups podcast, which is our quarterly investor vibe check, where we welcome 3 industry investors to get their perspective on the last quarter within real money gaming. This time around, we welcomed Joel Simkins, Paris Smith, and Evan Meyer, and it was another can't-miss discussion. Panelists explored topics including the consolidation of micro-betting technology providers, the viability of the convergence model between sports betting and media, the pending regulation of Brazil and their expectations for that market, the attractiveness of the sweepstakes model for investors, and they even provided some tactical advice for founders seeking mentorship from industry veterans. I got a ton of value from the panelists in this episode, and I know that you will too. But before we get started, quick reminder that the Betting Startups newsletter is the only weekly email that brings you everything you need to know from the industry's early stage ecosystem. Check the show notes for the link to subscribe. Join thousands of other people that keep their fingers on the pulse with the Betting Startups newsletter. The Betting Startups podcast is presented by Optimove, the #1 CRM marketing solution for the iGaming market. 4 out of the top 5 US operators personalize player experiences with Optimove. Learn more about Optimove by requesting a demo at optimove.com/bettingstartups. If you like what you see, you'll get your first month free. All right, we are back with episode 135 of the Betting Startups podcast, and I am back home from Lisbon after a busy but productive week at last week's SPC Summit. Short rest here before we turn around and do it all again next week at G2E in Vegas. But before we get there, we want to acknowledge that it's October now, so happy Q4 to those that celebrate. It also means that Q3 is in the rear view, and because of that, once again, as we do every quarter, we've assembled a panel of highly respected and accomplished industry investors to join me for our quarterly investor vibe check episode. So I'm very pleased to welcome 3 new panelists to this one who collectively bring a diverse body of experience and perspective. So really excited to get going with this one. We'll start, as we always do, with a quick round of introductions. If each of you could please share a bit about yourselves, your investing background, and maybe name drop any companies you're involved with, that'd be awesome. We'll go alphabetically by first name. So let's get started with Evan Meyer, managing partner at Astralis Capital Management.
So my name is Evan Meyer. I'm a co-managing partner of Astralis Capital alongside my partner, Tisno Angara. Astralis is a sector-based venture fund globally investing in the digitization of gaming, sports, and media. I personally sit in Sao Paulo, Brazil, and my partner sits in Beverly Hills, California. And as I said, we do look at the global nature of what's going on in the gaming space. A couple of our positions include names such as PrizePicks, SGG Media, Forever Network, a sports media company called Takes, and a variety of others in the sector, including Strive, which is a US-based PAM, and then a spin out of Strive called Play.io. We are typically stage agnostic. We want to look at expected returns and typically deploy checks of anywhere from $100,000 to kind of $500,000. We're almost through deployment of our first fund. We're in the market raising our second fund.
Awesome. We'll now go over to Joel Simkins, founder and CEO of XST Capital Group, somewhat of a startup itself, I might mention, that supports industry companies to develop their strategy, raise capital, and navigate M&A. Joel, over to you.
Yeah, hey, Jesse, great to be here. I will correct you already, though. It's XST Capital, but you're not the first to call it XST. But it's really a play on being focused on the next generation of the industry. I've been on Wall Street for 25 years. I spent the first 17 years as an equity research analyst at places like Credit Suisse and Macquarie. Pivoted over to the investment banking side 8 years ago, built out the investment banking practice at SunTrust, which ultimately became Truist. I've spent a couple of years at Houlihan Lokey, where I was heading up our efforts in digital gaming, and decided to pivot and, to your point, become a first-time founder about 4 months ago. We've been off to the races and realized there was just an opportunity to focus on sort of small and emerging companies in the digital ecosystem that are very much underbanked. When I was at my prior firm, we had very, very high minimum fees, and it just was kind of unpalatable to be helpful to a lot of early stage companies in the space. And our phone's been ringing off the hook. We're live on 4 mandates right now, mostly on the capital raising front. We've got 3 M&A proposals out to prospective clients right now. And we're really helping folks out from a capital raising, M&A, and strategic advisory perspective, just leveraging my time in the industry and industry knowledge. I'm personally invested in a number of companies in this space directly. We're not a venture capital fund, but the quote unquote family office has some investments in things like Pickett and Betty. I'm also an investor in a few different early stage venture capital funds in the space. So I like to tell folks we're really eating our own cooking and really all in on the sector and huge believers of the long-term structural growth of the industry. So that's a little bit about our business, and love being an intersection for folks on the capital front and advising companies in the sector.
I'm just going to hype you up for a second as well, Joel. For somebody that's as senior as you are on the investment banking side, I don't think there's anybody I've come across that's as close to products. Like, you're always checking out new products. You're always hyping them. You're very hands-on. You're not so senior that you're very distant from the products, right? So I just want to shout you out for that. You have as good of a pulse on the new products emerging from the early stage companies as anybody I talk to. So
lucky enough to live in New Jersey. So, we've done it right from a regulatory perspective in my personal views. So I'm able to really test the product and dig in. I think that's really helpful. And that's how we differentiate. And even in the markets where I can't use certain products, like I was in California a couple weeks ago, I was able to spend a lot of time on DFS Plus and kicking the tires there while I was unfortunately at the Jets Niners game where we got killed by the Niners.
Awesome. And to round out our introductions, I am very pleased to welcome my dear friend and former boss of 6 years and former CEO of Pinnacle, Paris Smith, who now is doing a lot of excellent work supporting early stage companies through her company Life Winning, and also recent podcast guest with her co-founders in a new project called Defy the Odds that she's working alongside Kelly Keane and Sue Schneider on. Paris, welcome to the podcast again a few weeks later. Give the folks listening a quick sense of what you're up to these days from an investment perspective.
I stumbled upon angel investing just by, when I was with Pinnacle, everything I looked at had to be for Pinnacle. If it didn't, I just didn't have time to look into it. And after I left, it was like a whole new world. And what I realized is as I started the industry, back in, 30 years ago, that was a startup in theory, of course, with WWTS. That was the most exciting and the happiest part of my career. So just by nature, I started looking at decks, talking to people, and I found, with the experience that I had as an operator, I was able to look at it and say, is this something I would use? Would I really look at this? And a lot of times I feel like the startups are told, yeah, this is a great idea. But from an operator perspective, I would have never considered integrating. So through that process, like I said, I stumbled upon the angel investing, created Life Winning. And through Life Winning, I have one partner, Silka Diet. And we've invested in Rhythm, which I'm a huge fan of. Things that are within my DNA, I really enjoy. Hero, great leader within that organization. And of course, the big topic of micro betting. Hot takes, I love the media side. The part where, a lot of companies, they have marketing, but they're not executing effectively. And I think some of these companies up and coming, Hot Takes, Sharp Spake, I think they're really going to have a place in the industry. Recently, WagerWire, I've put some funds in, and Forever Network, phenomenal group of people. They're actually visiting me here in Curacao. So if you see pictures of a beautiful beach, they're with me. And then I do some advising with Rivalry, which is, I've always been a huge fan of Rivalry. And all of these things, I think the common thread is they know how to speak to the player. So that's kind of what I've been focusing on, angel investing, nothing major, but also then through Defy the Odds, that's just exciting. It's such an honor to work with both Sue and Kelly. But that one is really utilizing our network to help. We've been doing it for years. We wanted to formalize it and allowing and giving people an opportunity. There's so many of us out there that people can go to. Sometimes people are dismissed, and we want to help those people, guide them through the ecosystem. We're working with a number of companies. We're still defining what Defy the Odds will be, but we're going to be working with Zero Labs cohort. There's a number of different organizations that they've reached out. It's been super exciting, the support that we've gotten. And I think, we will create an environment that really is just part of the ecosystem and allowing people to be more successful. You want to give them the opportunity and whatever guidance you can give them to continue to move the industry forward through innovation.
Excellent. Well, with the introductions out of the way, we have a busy agenda ahead of us here. So let's get right into it. To start with today, we do want to look back on Q3. There's a couple sort of themes I saw emerge that I'd love to spend our time on. And Paris, you set this up perfectly. The first one I'd love to talk about is micro betting. So just to sort of set the table here in Q3, we saw some consolidation within the micro betting provider category. Most recently, the headlines around Simplebet's acquisition by DraftKings. We saw another provider, Huddle Tech, license its tech to Betr. Earlier this year, we saw Sports IQ, another pricing provider, also get acquired by DraftKings. So some of these growth stage companies servicing the category are getting, swallowed up here, which is really, I think, narrowing the playing field for those that are left serving it. And I'd like to start with Evan and Joel here and just get your guys' general observations and notes about the category given these dynamics. And some things I'm curious to hear your guys' perspective on is whether there's room for new entrants to come in and build meaningful businesses to supply what is now really seen as a table stakes product, right? A couple of years ago, micro betting was still this, I would say, niche or very sort of nice to have product, but now it's a must have, right? It's table stakes. Every operator worth its salt expected to have some level of micro betting product in its menu. So again, just given this backdrop of these consolidation dynamics, what's going to play out here? And do you see opportunity for new startups to come in and serve this category? Joel, let's start with you on this one.
Yeah, I'll jump in here, and that's a great question, and I think that's totally spot on in terms of your observation. Listen, I think it's a natural evolution of the sector, right? If you're a major operator, even a second-tier operator, you want to own as much as your tech stack as you can to ultimately improve your unit economics, right? We all know it's expensive to acquire and retain clients. Interestingly enough, one of the first clients that engaged me after my last employment opportunity was Mojo. So part of our strategy piece is help advising companies navigate the industry, helping them develop relationships with potential customers. So we've actually been working very closely with Mojo, who's pivoted from their B2C business over to B2B, essentially spinning up a business that's going to compete with Swish and some other folks in the space. So I've been able to spend a lot of time helping them think about their strategic roadmap and rolling out these products, which I think you'll see very soon, working closely with Fliff, who is a partner of theirs, as well as a few other folks they're going to be onboarding soon. So it's been interesting to see how the sausage is made. And I think the reality is there's a lot of interesting technology. You have a lot of folks that see this as an interesting landscape. Not surprisingly, as you can imagine, there's a very long lead time, right, to develop these relationships, to get on people's engineering roadmap, and ultimately to integrate them and go live, right? We're all sitting here in the fourth week of the NFL season. It's all hands on deck to make sure that goes well. So I think you'll see more of these tools come to market. Obviously, the Zero Flux transaction was interesting. I've met Steve a few times, and I think that was a nice tuck in for Caesars, but doesn't mean that these companies are done integrating or targeting additional, tuck in opportunities.
Yeah, I'll add to that. I think, that lays out a good framework. There are several new entrants in the space. I think, as you mentioned, Huddle, they're offering product, and Venue's offering product, getting ready to kind of ramp there. It's, as Joel said, it's a table stakes really game here. And, I think you'll see continued development of micro betting transactions within same game parlays, within parlays across. So you're taking the transaction down even further. And that really relies on real-time data and, zero lag. And, we're there. I think when we look at it from an investment standpoint, we're framing the market size, right? We're framing the opportunity set. With DraftKings taking Simplebet off the table, that throws some business back into the mix, I think. It certainly hasn't happened yet. I don't think they're kicking anyone off the platform, but that will, inevitably lead to opportunities for competitors. That being said, you start to look at, the overall aggregation of legal online sports betting, and you have to be with one of the top 4, 5, 6 companies in order to really get to a sizable market share. And that trickles back in our minds calculus into, what are we willing to pay for that opportunity? What risks are we allowed to take for, potential returns? And that's generally kind of how we frame it. But, it's a product that has to happen. I would argue that even if you look outside, and Joel mentioned Flip, you look outside of the traditional OSB guys, you've got to look international. There's a ton of U.S. product that needs to go international with U.S. sports. You look at sweepstakes and even DFS 2.0, like those are natural homes for this type of product. So that actually expands the market rather, sizably, rather than just looking at kind of the legal OSB market.
Awesome. And Paris, I'd like to flip it over to you, but frame it slightly differently. You mentioned one of the companies you've invested in is Kiro Sports. I'll give a shout out to Tomasz, who, as you rightly said, is definitely one of the most impressive founders in our space. But, given that you do, have involvement in Kiro and presumably a bit of insight into what's going on internally there, what I'm curious to get your perspective on is just any insights you can share about the success of the microbetting product from a commercial perspective. And maybe as a part B to that question, last time I caught up with Tomasz, he was lamenting how it was a little bit slow to get integrations for Kiro in the US, and therefore they really turned their attention internationally to kind of get that initial traction. Just what can you share with the audience about sort of what you're hearing and seeing based on Kiro's traction?
Yeah, Tomasz has done a phenomenal job. I think, as Evan said, they're not throwing people out. But if I'm an operator, I don't want to be on a system that DraftKings owns. So they don't have to throw them out. They're coming running to Kiro, fortunately. And I think, what their advantage is, they're constantly listening to the consumer, and they're still very nimble. And, I think that's what's going to help them maintain this competition with the other people coming in and Venue, as you said earlier, and Huddle and, those other companies. But their attention to detail, constantly improving the product, even when these others come in and when they get on somebody's roadmap and, in order to integrate, which is, as we've all said, super complicated and difficult because of the simple bet transaction. I think he has an upper hand here, but he's not, so the integration, they're phenomenal at doing once somebody's ready, to take it in, but just that constant improvement. So they're going to have to not just, once you do all the integrations, it takes time, you slow down. So I think he's kind of walking and chewing gum at the same time with that.
Awesome. Let's shift from microbetting to another theme that I saw emerge from Q3. I'd love to get your perspectives on here, which is the famed convergence, air quotes, of media and betting. And just to frame this one up, in Q3, possibly might have been late Q2, but nevertheless, we saw DraftKings divest the VSiN asset, which it had acquired a few years prior, which was reportedly sold back to its founders for $1. So well done to those folks, if that's indeed how that transaction went. We've also sort of seen just continued bearishness sentiment-wise with respect to the relationship between ESPN and ESPN Bet and just the integration of the betting product within the core media assets, all of which taken together tells a little bit of a story around, I don't want to say the failure of the convergence model, but certainly isn't exactly as wildly successful as maybe people anticipated a few years ago. On the flip side, however, in Q3, at the startup and growth stage level, we saw a few new attempts at convergence using, new media. And WagerWire is a good example of that. They launched Wire Media, and I think that's going quite well for them thus far in the early days. Verse Fantasy, a DFS provider, launched a media arm of its own, Verse Media, which is basically its own sort of owned and operated affiliate channel. Better Media continues to grow its audiences across the properties it owns and operates. So I guess, we're seeing sort of two different stories emerge here. And just open questions, a bit of a jump ball here for anybody that wants to start up. But really what I want to understand is, do you fundamentally believe this convergence model can work? Why do we think that early stage companies investing in this model can make it work while incumbents like DraftKings and ESPN have seemingly struggled? And is this new media model more conducive to driving player behavior than legacy media formats? So there's a lot to unpack there. Again, jump ball here for anybody who wants to get us started with this one.
So I would liken it to, you need to think about the demographic groups they're trying to reach, right? I think boomers, Gen X, millennials, Gen Z. When you mention kind of the old media that's failing to convert, I kind of liken that to the Steve Buscemi with the skateboard meme where he's like, how do you do, fellow kids? That's a struggle. They're going to, I grew up with ESPN. I'm 45. I grew up with ESPN. I grew up religiously watching SportsCenter. I have zero affinity to that model from betting. And, that's me aging out probably their core demo. But, if you look at some of the Gen Z, like it's just millennials and Gen Z are where it is, and it's happening. You look at what's working, and I argue that, traditional media can't lead that OSB convergence. You need, particularly amongst the younger cohorts, look at the Prize Picks of the world, the bettors, the sweeps, casinos. They're utilizing social channels. They're utilizing the Instas, the TikToks, the Twitches, the Discords of the world. And they're building out that next generation of customers into a very unique product that looks different than traditional DraftKings, a traditional FanDuel, traditional ESPN bet. So like it's happening. I think it's just not happening at the level, that kind of, I won't call them the dinosaurs, but the well-regarded, kind of well-structured big players in the industry can move. And that's a disruption, right? Like that's the core of what every venture capital looks for. It's who's disrupting who. And right now it's happening.
For sure. I agree completely. I think, of course it can happen, but the one critical point is that it requires innovation, right? And you have the DraftKings and everybody, and ESPN. It's, they have their, like Evan was saying, they have their clients, but they just don't have that affinity. But more than that, they don't have the ability to adapt to change and, and do it quickly. So I think that's where, groups like Forever Network, they do this organically from the ground up. They know how to speak to the player. They go directly to them. And I think when everybody I know that I'm on Facebook with, from anywhere, Antigua, the Asia, from home, wherever it is, they all are reposting Forever Network and Forever Basketball. And I'm so excited about that every time I see it. But I just feel like that nimbleness and that ability to speak to the player. I always have, these old school things that I think I got them like literally 25 years ago. Saturated target market. That is what these media companies are targeting. So ESPN, that's a massive market, but it's not the saturated target market. And they're literally, as you said, through different media channels, speaking directly to them from the ground up and just really hitting home and getting those, acquisitions and retention that a normal sports book or the media converted to sports book, they're just not able to get that traction. So I think down the road, these guys are going to be great M&A targets.
Yeah, I think, Paris and Evan hit the nail on the head. You have to really figure out what, generation you're trying to target to and how you can acquire them effectively. And I mean, you just look at Better recently. I just saw something posted by them that, Hawk Tua, love her or hate her. I mean, it's the number 2 podcast in the country after a couple of weeks. So people are tuning in. So maybe she's drawing at a more casual demographic that isn't a hardcore gambler, but it's going to maybe skew a little bit younger and maybe that a group that's not being touched. And I think, as Evan pointed out, that traditional terrestrial cable media, it's just dying. And that's unfortunately what a lot of these legacy land-based folks know is, let's just advertise on cable. Well, that doesn't really work. We know, like, the math shows you, I'm 48, right? So it's like I'm at the edge of that, but it's like the 40 and up, like, yeah, they're still watching cable. Anything below, probably not. And, many of folks are cutting the cord. So you've got to really touch upon these folks in, different channels.
And I think, to that point, you can't just throw it on TV and expect people to respond to it. And what all of these media companies are doing that's unique to the other groups is basically they are creating that community. That's the key, creating the community and then speaking directly to them and pushing out, different behavior that you want to acquire.
And I think one other thing too, just to add one final point, Jesse, is, we're in 2024, right? We're not back in 2020, 2021. I think maybe perhaps traditional cable was really good a couple of years ago, but we're not in this spray and pray marketing environment anymore. We're really in targeted marketing. That's something I hear from the clients I deal with is we're really being laser focused on where we're spending our money right now. And, cable maybe was good a few years ago. Now it's probably not as effective.
And I'd add one more thing. It's like, I think when you look at startups in the space, they're really focused on this tectonic shift of sports consumption. Like it is absolutely changed. The younger generations aren't going to games. They're not sitting and watching full games. They may have it on in the background. They're on, that may be their second or third screen, and they're still fans. They're consuming in real time. They're consuming online, via Instagram, via TikTok, via Twitch, or Discord. That may be their third screen, second screen as well. You have to build to that, and I think that's a huge conundrum for every major sports league, every major television corporation, everyone trying to look at rights negotiations over the next 10, 15 years. There's a demographic that's just not moving in that same channel. And, I think Joel and Paris hit on the head with there has to be a social component to this. And that is what is important to these demographic. I mentioned the company that we're invested in, Takes, which it's a sports social media. If any social media should high law from X, from Twitter, and be kind of a safe place to play, it's sports. You can have disagreements over fan bases, et cetera, but it's all done in jest. I think that is something that deserves its own playground. And what they've done is they've gone and basically done so much survey work of this particular demographic. And they want games. They want dedicated places to talk about their favorite teams, whether it's a betting option or in Take's case, they partnered with Lucra to offer peer-to-peer. It's a super interesting way to think about everything's different with the younger generations. And that's what I think keeps me young in my job, because we get to see kind of what's coming day to day, and it's moving at the speed of light right now.
Keeps us relevant.
I'll expose my Canadian bias here and quote the great one. It's all about skating to where the puck is going, right?
Yeah,
for sure.
Awesome. Let's leave the Q3 look back there and shift to a bit of a Q4 look ahead here. Obviously, we're into day 2 of Q4, but there's a few things I think that are bubbling up right now on everybody's mind. And as I mentioned at the outset here, we're a couple days away from G2E, where I think these topics will really sort of come into the forefront. The big one, is Brazil, right? Evan, you're sitting there in Brazil, and Brazil's on track to regulate in Q4, to my understanding. And please do correct me where I'm wrong. I don't profess to be a subject matter expert on the regulatory progress of the Brazilian market, but I do understand there is somewhere around 130 operators said to be applying for licenses there. And I have a slightly different question for each of you on the topic of Brazil, but we will start with you, Evan. Just, for you as a resident of Brazil and arguably amongst the folks here today, the most attuned to the market, just what are your general expectations for the first year of the regulated Brazilian market? And as a second part to that, what opportunities do you see for startups looking to ride the Brazil momentum?
So there's a Portuguese word for kind of big hot mess, and it's bagunça. That's what I generally see coming over the next year. It's a market that's pretty well defined right now. You have everyone going through the legalization process, but at one point there were, I think, 2,500, 3,000 different gaming sites, gambling sites online. That's moving towards the kind of 115, I think, have applied for licenses. And within those licenses, I believe there's 3 sub-brands you can run per every license. So there's still going to be a lot of consumer touch here. The market is big. It's already big. It's been operating in the gray area for a long time. You've had those battles over building your customer database, right? And you've been able to do that without paying any taxes, without the customers having to pay taxes. That's been a great place to be. But again, I love my new home in Brazil, but it's Brazil. And, I think I would put everything, an asterisk on that. Brazil, when politics are involved, it gets a little messy. And if you look at the newspapers from today, from this weekend, the central bank runs the payment clearinghouse here at PIX. And everything is done via PIX. They can get a certain level of detail, customer level detail, about transactions. And there were some significant data points that came out over the weekend from the central bank on PIX that said, there's a social program called Bolsa Familia. And that's basically, it's a transfer of money from the government to the poorest people in Brazil for food, for education purposes. The amount, 25% of Bolsa Familia recipients placed bets via PIX in August. I mean, that's significant. and of the amount of money transferred from the government to also familiar recipients, 3 billion reais, or close to $550 million, was bet from those households online. And I think that speaks to, and there's clearly reason why the government wanted to get that out, and they're playing, kind of defense right now. But it has to happen. And I hope the industry gets ahead of it from a responsible gaming and just social safety net discussion, because there's a lot the industry can do. And there's a lot the government can do by limiting PIX transfers, by kind of reining in some of that spend. I just don't know. One of my biggest worries in Brazil is how, okay, everyone goes through the legalization process. How does the regulation, who's going to enforce, and how hardcore are they going to enforce the regulations? I don't know. It's Brazil. But the market's so big that the opportunity is here. And clearly, back to your question on startups, we haven't seen too many really kind of startups going after the B2C side, because it's already a massively expensive game. And I would liken it more to Ontario legalizing than like a New York State legalizing, where you had the gray market. It basically like you're out of business if you don't transfer over, versus kind of clear white space and, a state by state regulation in the US, where I think there will be some interesting opportunities. On the affiliate side, on the marketing side, there are some strict marketing laws down here, but that's still going to be interesting. I think product side, what I haven't seen is someone going after the 25 to 55-year-old female customer, right? Like it's been very sports dominated, very football, soccer dominated down here. So, I think as they start to look at the market, and it's not just sports betting with iCasino, it's, Joe to Bicho as well. There's going to be a huge movement to see, okay, where can we find our niche? Because the top 5 guys are going to have the same kind of market share that we see across the globe. Sorry, I know that was long-winded.
No, I appreciate that. And Joel, over to you, just to sort of pick up where Evan left off there. To me personally, I feel like this anticipation for the launch of Brazil, like it's very palpable. And to me, it almost feels a bit like the US did around the time PASPA was repealed. And just from your perspective, and particularly where you sit in New Jersey, where it's sort of the epicenter of innovation and, sort of all of the momentum initially in the US market, like what do you see as the main similarities and differences, I guess, when comparing the two markets at the respective starting lines for each?
I'm a little jealous about Evan being in Brazil. That sounds like a lot of fun, but I'm actually an advisor and on the kind of advisory board, and also a small investor in Play Green, which is run by Nate Dion. So they're operating in Latin America, out of Curacao, as well as in some other countries in that hemisphere. They've thought about obviously entering Brazil, but I think what you're already saying, this is an opportunity where big dollars are required, right? Obviously MGM and their announcement recently. So I don't want to say it's already turned into the U.S. over there, but I think the punchline is unless you're armed with really, really deep pockets, it's hard to make a dent. As it relates to Brazil, they've thought more about, okay, can we take our platform, which is very, very strong, that is much more intuitive, easier to play, particularly maybe for a more inexperienced crowd over there, and license it out from a B2B perspective. So I think we're still pretty early days, but at least I'd say the North Star is pointing to you need a lot of capital behind you to be relevant. I think it's interesting what Evan just mentioned in terms of, the casual opportunity or more the female oriented, which is similar to what Betty's doing. I don't think there are any plans right now to enter that market, but, I'd say stay tuned, but you're certainly seeing, big capital chase that, because there are only so many massive greenfield opportunities left in this industry, particularly those that might not have a ton of hair on them. Nobody is entering, mainland China or Russia anytime soon. But Brazil's obviously been the mother lode, at least from when I think about putting my land-based gaming hat on. That was always quite a big conversation for gaming equipment suppliers, like particularly on the slot machine side.
Awesome. And Paris, your perspective here, I'd love to have you sort of share from the operator perspective, right? As Evan mentioned, there was, some number of thousands of brands operating and serving the Brazilian market in a pre-regulated environment. And that list is very quickly being whittled down to 100 and something. And what can you share, based on your time at Pinnacle, around what the operators are focused on right now for those that are applying for licenses in anticipation of the launch, right? Like for those that have been serving the market in the pre-regulated state, how are they adapting right now and sort of sort of recalibrating internally to get prepared for this regulated environment?
I think the operators that are going through the licensing, they're going to be stuck with any time you go to a regulated process. Everything screeches to a halt. Any innovation goes out the door. I mean, it's worth it in the end, but it comes at a high cost. I think the reality is, we keep making reference to it's like the US. And that market is going to be determined upon how the regulators are regulating. Because, what you see in every regulated market, once the regulators put in things, limits, different whatever, make it too draconian to even want to go there as a player. It's a double-edged sword. You have operators that want to make a profit there. They're not licensed. They have crypto. They have technology that can work around any regulation that's put in place. But more to that, the reason why they exist is because they have clients that don't feel like they're being served appropriately or properly in the regulated space. So I think it's going to be years of the same thing where, at SBC's event, I was on, interestingly, 2 different panels. I was a moderator for European leaders with like all the big hitters from the European side. And the North American side, the majority of people on the panel are pulling out of the U.S. market because they can't afford to be there. It doesn't make business sense to be there. But the European leaders, it's just going up a slippery slope because the regulators are over-regulating and putting in, and their focus is, how much more money can we get out of them through a fine, not how can we stop the people that are actually taking the market share from the people that we're regulating. So until there's some form of alignment between regulators and operators to actually really provide a proper service to the players, I think it's going to be more of the same in Brazil as it is in every other regulated market. I think you're going to have the regulated operators spending tons of money, doing a phenomenal job, the best that they could possibly do, only to be undercut by the unlicensed groups that are providing a direct service for the players and thriving and taking market share. Sounds awful now that I said it out loud.
Although I hear Ontario is like 90% regulated now and 10%, grayish. So it sounds like evolving in the right direction.
I hear you, but the problem with Ontario and, within Pinnacle, the biggest shock, I think, we were like, we can transfer everybody over. As you said, I thought they did an amazing job. The way, they allowed the people that had been there to be, have the opportunity to come right in, but then they don't allow crypto. Well, that was the majority of what was being used. So again, through the regulations, they managed to not be able to cater to the player. So I presume some of those players are betting somewhere where they can bet crypto, and it's not with a regulated partner.
All right. Well, let's shift to another substantive topic I want to spend a few minutes on today. Again, looking back on Q3, I would say the sweepstakes model has really, had its moment and really come into the spotlight in Q3 and built really a loud chorus of both supporters and detractors, right? We have the American Gaming Association quite publicly voicing its concern about the proliferation of the model and calling upon regulators to take a closer look at it. On the other side, we've had a number of the sweepstakes operators themselves form an alliance to really sort of defend against any potential regulation and get ahead of that. So I guess with that as a backdrop and looking ahead at Q4, first of all, from your perspectives as investors, like how are you just generally thinking about this category and its general attractiveness or perhaps lack thereof, given some of the regulatory question marks and presumably only louder calls for some potential evaluation of the regulatory model?
I find it very interesting, the AGA stance, albeit, maybe somewhat hypocritical. I think it's an industry that doesn't necessarily want to see change and needs to evolve. Listen, I speak to tons of lobbyists on a daily basis, as well as big law firms that represent, both sides of the argument. My job isn't really to judge. It's just sort of be in the middle and be supportive of the industry, broadly speaking. I think, listen, sweepstakes, DFS Plus, they're here to stay for a while. If there's an ice cube that will melt, it may melt a lot more slowly than you think. The consumer, back to Paris's earlier point around, wanting choice and want to kind of go where they can game, they're going to find a way to gamble or wager or play sweeps if that's the option, if they can. Most, folks that are playing Chumba Casino aren't really caught up in whether or not that's unregulated, illegal, gray. They just want entertainment. I think the challenge is putting my investment banker hat on when I get called about sweepstakes opportunities, either to raise capital or sell these businesses. I have to tell these founders just, very transparently that, your valuation multiple is going to be the inverse of the regulation. So if it's grayish, you're going to trade at a discount. You might trade closer to maybe 1x revenue because investors, institutional capital, they have to go back to their LPs and have to sort of bake in risk reward around their investment and what they acquire and or invest in these businesses at. So, if you're gray or unregulated, your business will be valued differently. It doesn't mean it can't be great for you as a founder if you're generating lots of cash and distributing that to yourself and other stakeholders or employees. But because there's question marks around how long that will last, it's ultimately going to affect the valuation of your business. So I'm working on one deal right now that's in the regulated iGaming space right now, and they're sort of slow and steady wins the race is my perspective. But, they've chosen to go down a lane of operating regulated, and that means it's a bit of a slower road to hoe in terms of 7 or 8 states in the U.S. with iGaming. I'm sure they'd love it to be 50 sooner than later, but if they're successful, that means they're going to ultimately drive longer term value versus sort of the quick hit if we're going to go in where it's gray and try to capitalize as much as we can on this opportunity.
I find it so interesting that the loophole for daily fantasy that created the 2 largest players in the market, now there's a loophole for the sweepstakes. I think the biggest concern is that these guys are going to come in and be real competitors. So, I love watching it. It does excite me. I think it's really fantastic. I think from an investor perspective, I have looked at a couple of them, and what I'm looking at is how creative they want to be. So, if they're looking more to try to push the envelope, that'd be something I'd be less interested in. Whereby if they're following the loophole, which is perfectly acceptable, I guess, but utilizing it to really just build that database for when there is a state that they want to go into, they have their database. And then they're going to be that much more valuable from a sales perspective as well. So I think it's ironic and exciting altogether.
Yeah, and I'd reiterate what Per said. As an investor, I wouldn't be doing my job if we didn't look at DFS 2.0, look at the sweeps. What we've seen is, even within the sweeps, the market share, again, is already concentrated in kind of 2, 3, 4 players. That's not to say those guys can't get disintermediated as well by a new product or a different seal, because we've seen some of that happen and, some pretty fast competitors rise in the DFS 2.0 space, but it has to have a pretty unique angle in order to kind of, break that duopoly or tripopoly, in the space, because the battle lines have been drawn and you have a really good market share, kind of well-defined market share in the space. That being said, definitely agree with Joel on the, looking at it on a cash flow basis, valuing from a cash flow business or from a cash flow perspective, and, the throwing a very much a depressed multiple on the terminal value of the business, because you just don't know. That uncertainty, it looms large over the entire sector. That being said, there are some really good cash flows coming off of the industry leaders here, and that is highly investable.
Yeah, and if you go back to the history, just to put my old land-based gaming hat on, right? You look at Class 2 gaming 20 years ago, that was considered pretty sketchy. And then next thing you know, there's a lot of Supreme Court battles, and the Native American tribes won that battle, and that's a massive business now. I worked on a historical horse racing transaction previously in my career, where historical horse racing was this really, really niche product that a couple of racetracks were going to drive a slot machine outcome off of, the 10th race at Saratoga in 1985. That was considered really sketchy. And next thing you know, it's legal, and you have a company like Churchill Downs that's now the biggest player in historical horse racing. So the history of gaming shows you, it evolves. Regulators ultimately want revenue, taxes, job creation. So, you have to bet on the likely probability these things become more mainstream and regulated over time.
Awesome. We have a few minutes left here. I want to just quickly stick with sweeps and get quick answers from each of you. A bit of a prediction here, right? As Paris pointed out, at some point, the growth of some of these sweeps operators are going to be too big for the incumbent real money gaming operators to ignore, right? Just quick predictions. Like, do you think there's any possibility, whether in Q4 or beyond, that any licensed operators extend their core businesses to also provide a sweeps product, whether that be built and launched in-house or whether through M&A? Just do you think that's something that the incumbent operators are thinking about right now?
I would say absolutely. They even have, at SBC last week, there was providers that have a sweepstakes platform that you can put on, bolt on for a B2B. But so, I'll just start out by saying, yes, I think absolutely.
I'm going to go perhaps in the future, never say never, but probably not near term. Putting my former equity research analyst hat on, if you're making this up, if you're, Bill Hornbuckle, you're the CEO of MGM, and you're sitting in front of Wellington or Fidelity or T. Rowe, some of the biggest money managers, in the world, and you show up and say, yeah, we're in this business that's not regulated or unclear or operating in a loophole, that's going to go over like a lead balloon, and you're going to have the SEC perhaps knocking on your door. You're going to have regulators in your face, big shareholders. So I think until there's a little more clarity or some sort of really game-changing, defining legal opinion, I think they'll try to get smart and come up the curve and be educated, ready to move, fast followers. But I think it's tough for the big guys to really thread that needle at this point. I do think you'll see some of the DFS plus folks. Maybe that's a more natural pivot of, hey, we've got the database. Maybe this is a hedge on draconian regulation and DFS. Let's just pivot over to sweeps. So I think that is maybe, in my view, a more likely path.
Yeah, I think that's probably more likely the outcome. Or someone who's, in the kind of long tail of the legalized iCasino or OSB platforms try to offer it as a differentiation point. Maybe you see something similar to what Better or Underdog has done with trying to pivot to legalized markets in certain states and play nice in states that they can be legal. I think that's a possibility with some of the guys. But as we're seeing, there's more and more cease and desist letters coming out. The industry's good at lobbying, and we saw that over the last kind of 12 to 18 months in the DFS space. So yeah, I'm assuming that was easier, that coalition was easier to put together against DFS 2.0, just given the expansive reach of states that are legalized versus iCasino, which is more narrow. But they're fighting a losing battle, I think. It's hard to put the genie back in the bottle, and I think we'll see what happens, but I think it's here to stay for a long time.
Awesome. If you're good to stick around for a couple more minutes here, one thing we always like to do in this investor roundtable format is provide a bit of value to all of the founders and entrepreneurs that are listening to this episode. And given the wonderful panel we have here today, I'd be remiss to not ask a little bit about the role of mentors and advisors. Joel, I know you spend a lot of time with companies you don't necessarily have a stake in, just supporting the founders. And Paris, I equally know how much time you're spending with a lot of founders, again, many of which you're not, on the cap table level or involved in formally. And I guess just what I'm curious to have you share with the audience here is, what advice can you share with the founders on how to identify and engage the right mentors and advisors to help them on their journey, and how they should, think about approaching people like yourselves to get your time, which is very limited, and get your support to really help them get to the next level with whatever they're working on. Paris, maybe let's start with you on this one if we can.
So, I think one of the most important things is just being realistic and being open. Because when I am speaking to people, I look at the same things that I looked at when I was at Pinnacle: hungry, humble, smart, and passionate. Humble always seems to creep up to the top. And what I find is the ones that are humble and willing to take constructive criticism, however it may come, that's super important. Because sometimes when I sit and argue with somebody that's asking me for my advice, I'm like, I think I'm going to go take my dog for a walk. Like, this is ridiculous. You're asking me, I don't know why we're, arguing anyway, but, it's really just to be open and be aware. My biggest thing is just also talking to other people and getting feedback. And for me personally, I prefer the ideas concept. That's great, but I prefer if somebody's bootstrapped a bit and they actually have something, they're making some kind of money, and then I like to get in just to help scale. That's my preference.
everything Paris said was terrific and really spot on. I was sort of chuckling a little bit on the humble because I agree. We're not in 2020. There's certainly been a come to Jesus in this sector around being humble and not just showing up with a business plan. So you're having real skin in the game and, having you be able to bootstrap something to some degree. But listen, I think the bottom line is just reach out, right? Everybody that's on this podcast seems like a very approachable person that's very invested in this space. And I think, listen, gaming, one of the things I love about this industry, it's very much a cottage industry, right? We're all looking to capitalize on the opportunities in this space longer term. It's a fun business. I think everybody likes to put a wager on, but finding that sort of commonality, reaching out and not really being afraid to ask for help, but also doing your due diligence and making sure there's the right advisor. So, you might hear about myself, Paris, or Evan, but do your homework on that person and try to ask around. We're all very well networked in. We're all across LinkedIn, and you can find out, who the real people are versus the charlatans. And there are some charlatans and hucksters in this business, and I'm not afraid to tell these young founders, stay away from that person. But, do your homework, make sure you're reading up and just asking for lots of opinions before you take someone on as advisor, ask them for their capital, and really just ask them for their time. But, we're in a fun, dynamic industry that's ever changing. And I think, generally speaking, people are very collaborative and don't be afraid to ask for help. And I've even done the same myself. Again, I've been on Wall Street a long time. But when I was thinking about, starting my own business 4 to 5 months ago, I called a few other independent investment bankers, those that are not in gaming, but other verticals that I do through friends. And they gave me a lot of great feedback and advice. And they're like, listen, Joel, we want you to win. We want you to be successful. Here's a couple of the traps to avoid. And so far, knock on wood, we've avoided a few of those traps. But I think people generally want to help you out.
And I think, as both Joel and Harris said, within the industry, there are a bunch of different people with a bunch of different backgrounds. And that's why I love being a sector-focused fund, because you can leverage myself and 3 other venture funds can actually have different views on a company and have different ways to help that company. And, I think much like Joel, my background's in finance and investment banking, and you bring just a different viewpoint and a different kind of thought process together with the companies we advise, or whether or not we choose to invest. That's another big thing. It's like, we only have so many bullets in the gun, so to speak, and we can't invest behind everyone, but we're still here for the space to actually continue to grow and be helpful. Whether or not that's just our capital or if it's our time, we're happy to do that as well. And I think definitely in my conversations with Paris in the past, I think, that's something that just resonates really well. And you can do that as a sector-focused fund. Whereas if you're trying to look all across consumer, the top of the funnel is too big. And I think that's something pretty unique about, this industry in particular, because it seems to be there are a lot of open doors and a lot of great people.
All right, we're going to finish up today's conversation with a quick question, a bit of a fun one. I'm looking for a prediction from each of you. It's optional. If you don't have one, that's fine. But I'll set it up anyways. We're releasing this episode a few days before G2E to give everybody something to listen to on their plane ride into Vegas. Historically, G2E is often kicked off with the announcement of a transformative M&A deal. Oftentimes, we'll wake up on the Monday morning before G2E and see the headlines. And of course, the rest of the week, everybody's talking about it. Any predictions or guesses as to a deal we may see announced early next week? It can be crazy outlandish. It can be something that actually, has legs to it. Just anything you want to throw out there as a prediction to finish off today's conversation. Paris, we'll start with you on this one.
I don't have any prediction. Some of the things that have happened, I'm like, they're so out of touch for me anyway. So I'm shocked. Some things are super exciting. I guess the only thing I could say is I hope that there's something that's solving a problem that, one of these entrepreneurs is going to get in a tick up, but no prediction per se.
All right, Evan, we'll kick it over to you. Anything you want to offer on this one?
Again, hard to be Nostradamus here, but I think in general, I would go back to kind of our convergence discussion on media and converted kind of traditional media over. I think a lot of people are going to be looking for kind of exit stage right scenarios here, which I view as an opportunity, because I think there are ways to find unique startups out there to help, 1 + 1 = 3 or 4 with some of the existing platforms, but it's just everyone's been focused on getting the market, and now they're in the market, it's a little difficult. And I think as they continue to start to think about, how product can look different, how they can service different demographics, I think that combined with interest rates dropping over the next, hopefully 12 to 18 months, I think some of Joel's compatriots are going to be very busy on airplanes and Zooms. So I think we're going to see a lot more deal activity tick up in the space.
Yeah, I would listen. I don't necessarily foresee a giant transaction being announced. I think you'll see more partnership news and other kind of capital raising news out there. But we've obviously seen a lot of deal flow on the digital and land-based gaming supplier world. We're not really focused on that, but there's been a lot of big transactions for those that are looking at slot machines and other physical products. So I think it's going to be more of an incremental show, but I think I can guarantee you there'll be a lot of hungover people walking around and tired folks. So pack your comfortable shoes. It's always a lot of walking and a very, very busy conference.
Yeah, so sore feet are the safest prediction for G2E.
Exactly. One last thing is, I think, as you move away and the venture space in general, it's hard to look for the typical venture style returns unless you're super early. If you're looking for 5 to 20x type fund makers, the space is really difficult. That being said, there are a lot of really good products out there that will easily fall within the 2 to 4 to 5x zone if you do land one of the big guys as a customer. I think one prediction I see is that you'll see more of those type of products start to aggregate together in order to actually get pricing power, to get some negotiation power and leverage back on the supplier side.
All right, well, that takes us to the finish line for this installment of the quarterly investor vibe check. This one's been a ton of fun. And Joel, Evan, Paris, really thank you for your time and participation. Look forward to seeing you all next week. And to the audience, we'll do it all again 3 months from now. Thank you all.
Thanks.
Thanks a lot, Jesse.
Cheers. The Betting Startups podcast is presented by Optimove, the #1 CRM marketing solution for the iGaming market. 4 out of the top 5 US operators personalize player experiences with Optimove. Learn more about Optimove by requesting a demo at optimove.com/bettingstartups. And if you like what you see, you'll get your first month free.